Investing tips and strategies for growing your wealth. Investments are potent tools that can assist people in accumulating wealth and achieving their financial objectives. Although many people are put off by the complexity of investing, it's crucial to realize that there are numerous tactics that can be employed to be successful. So whether you're a beginner or a seasoned investor, understanding the basics of investing and wealth building is essential. Hello, and welcome to our channel. In this video, we are going to talk about some great investing tips and strategies for growing your wealth. So stay with us until the end of the video, and let's get started. Number 1. Establish financial goals. To become wealthy, you must first determine exactly what being wealthy means to you. Are you imagining Elon Musk to be wealthy? Or are you preparing a stress-free retirement strategy? You should establish your own financial objectives and develop a strategy for how to get wealthy on your own terms, because no two people define wealth in the same manner. You can use this to decide how much money you need to save in order to meet your definition of wealth and set financial objectives. Number 2. Create a cushion. Having an emergency fund is essential to any wealth-building plan. Many financial gurus advise having 3 to 6 months' worth of spending in your fund, but you may need more or less than that to feel secure. Build an emergency fund, store it in a savings account with a high APY, and always remember to replenish it after using it. Number 3. Start investing now. It will take longer for you to become wealthy if you keep putting off an investment plan. This is because savings is just not enough. You need to put your money to work by making market investments if you want to become wealthy. In addition, it's not easy to learn how to invest, but the time to start is now. Don't let the procedure frighten you. Start small, make use of the available resources, and keep in mind that the most crucial thing is to continue making regular payments to your investment accounts. Number 4. Diversify your portfolio. If there is one thing you should know before investing, it is to never put all of your eggs in one basket. Diversification is one of the fundamental principles of investing. If you want to become wealthy once you start investing, you must always bear in mind that having a varied portfolio is crucial. Whether you just own one sort of asset, such as cryptocurrency, yesterday's hot stock, or the new miracle investment your neighbor informed you about, it shields your wealth from the significant losses that can occur when you do so. Number 5. Boost your income. The more money you make now, the quicker you'll be able to reach your financial objectives of being wealthy. You can create a positive cycle of earning more, investing more, and achieving your goals by increasing your earning potential today. Although seeking progress in your current employment may be the simplest approach to increasing your income, if that is not possible, don't be afraid to think about changing careers. Number 6. Learn about FIRE. If you're interested in becoming wealthy sooner rather than later, you might want to learn more about the FIRE movement, which stands for Financial Independence, Retire Early. To increase the amount of money available for investing, followers of the FIRE investing philosophy strive to minimize all expenses, so FIRE tactics can help you get wealthy more quickly than you otherwise might without a vigorous saving strategy. Number 8. Understanding risk and return. Risk is a constant component of investing, so it's critical to comprehend how risk and return are related. You should know that every investment carries some risk, so it's important to diversify your portfolio by making investments in a variety of different asset types, including stocks, bonds, and real estate. Moreover, before making any selections, investors should also conduct their own research and carefully weigh their available investing options. Number 9. Value investing. A popular investment approach called value investing entails purchasing assets that the market has priced below their true value. Successful investors like Warren Buffett have also employed this tactic since it was popularized by legendary investor Benjamin Graham. Therefore, finding assets that are trading for less than their inherent value, which may result in a higher return on investment, is the basic tenet of value investing. One common technique used by value investors is to look for stocks with a low price-to-earnings or PE ratio, which measures the price of a stock relative to its earnings. A low PE ratio can indicate that the stock is undervalued and may be a good investment opportunity. In conclusion, we can deduce that investing is an essential component of accumulating lasting wealth and achieving financial freedom. However, it's crucial to keep in mind that investing entails risk and that there is no one-size-fits-all approach that can ensure success. So before making any investing selections, it's important to conduct research, comprehend your goals, and speak with a financial counselor. And this is it, guys. We hope you found this video informative. Don't forget to like and subscribe to our channel for more amazing videos. And thank you for watching.